What's going on, guys? It's Jimmy here with your $2,000 third stimulus check update. And I want to say thank you to our sponsor, Callinex. And the number one question I want to address first is that I get this question all the time on probably every video or every other video is with the government spending trillions of dollars and basically printing trillions of dollars of stimulus money, and probably this is going to continue for the rest of the year as they come out with more stimulus checks and stimulus packages until the pandemic is over. What will kind of happen to our money over time with inflation and also the raising of the minimum wage to $15 an hour, which is what President Biden wants to put in the third stimulus check package? In fact, it's already in the outline of that. So, number one, what kind of happens to your money over time? So, first of all, we think about $20. Well, $20 when I was a kid, I mean, my family could take us out and we could eat an entire meal for under $20. And you definitely can't do that now because I just went through the drive thru at McDonald's to get me and my wife and my son a Happy Meal. And, me and my wife didn't eat Happy Meals, but we got McDonald's, and it was $26 for a family of two adults and a child. $26. So obviously over time your money definitely is not worth as much, and that's because of inflation. And a lot of people are worried if inflation will go up because of the trillions of dollars of stimulus money that the government is spending. Now, I kind of feel like there's arguments for both sides in this. I'm personally not too worried about like abnormal inflation because of stimulus, because other countries around the world, especially almost every first world country in the US or in the world is spending and printing stimulus dollars to keep their economy afloat and to kind of get us through the pandemic. But what I am concerned about a little bit even more is what will happen to our dollars when and if they are able to raise the minimum wage to $15 an hour across the entire United States. Right now, the minimum wage is $7.25 per hour. So the question is, if they basically double minimum wage or more than double, what will happen to your money, especially over time? And we go back to that scenario where $20 used to be able to buy you a complete family meal, but now it probably can't. So if all the employers, say McDonald's and restaurants and food services and the companies that make the food and ship the food and all of these places, millions of businesses across the United States suddenly have to pay double the wages that they were paying yesterday when this happens, what do you think will happen to the cost of food, to the cost of gas, to the cost of products at Walmart, and everything like that? Well, most people would think that those costs will have to go up, and probably some jobs will get lost because a lot of small businesses simply won't be able to pay that, and will have to raise the cost of everything to pay double the wages. If your wages double, you're probably going to have to raise the cost of your product, the cost of food, and pretty much the cost of everything. So, really, how can you combat this? Well, the age old kind of saying, or like the method of doing this, is really two different ways to kind of combat your money from losing leverage over time and basically losing itself to inflation. Again, $20 20 years ago could buy an entire meal, possibly even have leftover, and now it can't even do that. Your money over time is simply worth less. If you had $20 or $100 in a safe deposit box 100 years ago, that's still only worth $100. But $100 100 years ago was worth a lot. Now, two different ways to basically hedge your money and make it grow over time as opposed to lose money over time. Well, the first way is in precious metals such as gold or silver. Owning these increases over time historically. As you can see on this chart of an ounce of gold, a 20-year chart, 20 years ago, an ounce of gold was around $250 to $300 an ounce. Now it's about, what is that, almost $2,000 an ounce. In fact, it was over $2,000 an ounce lately. The last close was $1,869 an ounce. So we'll just say $1,800. So the cost of gold, if you had gold invested and you had a 1 ounce of gold, 20 years ago you could have bought it for $300. Now it's worth $1,800. Of course, this fluctuates as you can see here, but over time, you can see the graph just goes up. So basically, owning, say, an ounce of gold would be a good investment. If you bought it in 20 years ago for $300 and it's now worth $1,800, that's about 6 times your money. So basically, your money is worth 6 times more 20 years later as opposed to less money 20 years later. Same thing with silver. As you can see here, these are ounces of silver. Pretty cool. Silver is the exact same thing as gold, pretty much, I mean, in the charts. When you look at a graph of the price of silver for 1 ounce, 20 years ago was $138. 20 years ago, an ounce of silver was worth $4.45 in May of 2001. So you could buy an ounce of silver for under $5. Now, an ounce of silver is worth $25.49 as of today. So you went from under $5 to over $25. So again, your money is worth 5 or 6 times more over the course of 20 years in this silver chart. Another way to basically hedge your money and make it not lose over time but gain over time is through the stock market. Two of the most common stock market indexes, the S&P 500. If we look at the S&P 500 here on this graph that starts in 1985, so that's about 35 years ago, 36 years ago. The S&P 500 was at $181. So basically, if you had one share of an S&P 500 index, it would have cost you 185, let's just say $200 here, okay? The cost of that now, or the value of that now, is $3,841. So something that you bought for $200 back in 1985, the S&P 500 index, is now worth $3,800 plus dollars. That is a significant increase in your money. Same thing with the Dow Jones Index. Back in 1992, the Dow Jones Index was over 3,000. We'll call it 3,300. Now today, just under 31,000. So again, something that you bought for, say, 3,300 is now worth 30,000. So literally almost a 10 times your money. Your money is worth 10 times more basically in the course of, what is that, about 26, 27 years. Your money has been basically gone up almost 10 times, 9 or 10 times, as opposed to losing money if you had your money just sitting under your bed mattress. Now, one of the problems with owning something like this is you have to store it. You have to hope somebody doesn't steal it from you, or you don't misplace it, or you move and you lose it. And then when you want to sell this, when you go to sell something like this, who do you sell it to? You try to go to, like a jewelry place and might buy it, but they got to make money too. So they're going to give you less than what it's worth typically. Now, stocks are easier to sell because you just go online in your stock brokerage or your 401k or whatever you have, and you just click sell, and pretty much the money goes to your bank or to your settlement fund or something along those lines. Now, something that I've been looking into recently and kind of researching is a blend of the two. Something that is basically gold and silver, but also a stock makes it easier to sell and you don't have to store it in your basement or store it under a mattress or something along those lines. And that kind of leads you to the stocks of mining companies. A company that I've been looking into recently is called Callinex Mines, and it looks very promising. Callinex Mines is a company that currently has development stage projects in Canada that are showing promising results. The company has zero debt, and about half of its shareholders are institutions and individuals from the company, which is very good. It means that their investors believe in the company and the projects that they are working on. Callinex Mines, as you can see here on the screen, has the stock ticker CLLXF and currently has 3 different projects in Canada: Manitoba, New Brunswick, and Newfoundland. These projects have already been drilled and are shown to have promising mineral resources. In Manitoba is the Pine Bay project, where they have a very significant discovery, the Rainbow Discovery. The Rainbow Discovery, made within mineral lease adjacent to the high voltage power line and a historic shaft, with direct road access to processing facilities. This means that this location already has the infrastructure already present, which is very important. It's not out in the middle of nowhere. In 2021, they will be conducting further drilling and expanding this project. In New Brunswick is the Nash Creek project. This project already has their PEA, which is very important. It's preliminary economic assessment, which shows the great potential of this project. 2018 PEA for Nash Creek and the Superjack projects outline a strong economic return with a pre-tax IRR of 34.1% and a pre-tax NPV 8% of $230 million. NPV is net present value, which is 8% of $230 million. This project also has world-class infrastructure very close by highways and transmission lines 1 kilometers away from deposit, seaport, smelter, railway, and power plant less than 25 kilometers by road. In 2021, they will continue their drilling and soil sampling campaign to cover widely spaced silver discoveries. Lastly, in Newfoundland is the Point Leamington project. The Point Leamington project is located in an area with historic inferred mineral resources. The Point Leamington project is also situated within a world-class infrastructure. In 2021, they plan to conduct soil samples and issue an updated 43-101 compliance resource, which is a report about all the mineral findings. If you want to learn more about Callinex Mines and their current projects, please check out this research report that I will link to you down below in the description of this video, which has more information about their projects and about Callinex Mines, the company. The link for this will be down below in the description of this video. So let me know your thoughts down below in the comments. Are you worried about inflation? Are you worried that if they raise the minimum wage to $15 an hour, do you think that the cost of everything is going to go up because of the cost of shipping, the cost of employees, the cost of people working in restaurants, the cost of people making the food, the cost of people shipping the food? Do you think that'll raise the prices of pretty much everything and we will have to worry about more than normal inflation going forward? Let me know your thoughts down below in the comments. And if you're new to the channel, make sure to subscribe down below. I will be covering all sorts of interesting questions like this about stimulus packages and upcoming stimulus payments and everything like that in the future. So make sure you're subscribed, click the bell icon so you get notifications. I will be keeping you updated on the latest breaking information on everything stimulus related in the future. You can click this top video here to watch my newest stimulus check video. Thanks for watching, guys, and I will see you in the next video.